Hello everybody, this is an update on the stock screener and today we are going to talk about Winston Gold. We have a new news item. Winston Gold has an update on the Paradigm Mill facility and they say that they have currently 30 tons of flotation concentrate ready for shipment. So this will bring in some revenue. We're going to calculate how much that is. And there's also an additional 10 tons. They did some upgrades here. Wheel-fit table to increase recoveries, flotation, concentrate filter. So that's good news, but we also have bad news. So apparently they needed to replace the bearings of the ball mill, and that will give us 30 days of downtime. We will also calculate to see if this has any impact on the cash position. And other than that, we have further minor issues on the flotation cells. And they will also install a set of new cleaners here, cleaner cells, to improve the recoveries. In the last video, I said that there were problems with the recoveries. And well, they didn't give any numbers here, so we need to guess. But apparently they are going to increase the recoveries even more. And lastly, we know that after these upgrades of 30 days, they will be processing a high-grade stockpile, which means they have been processing low grades here from test mining, but they will turn to a high grade soon. So let's calculate some of these numbers. Let's start with 30 tons. So from the test mining from 6 days, they have 7 tons and now they have 30 tons. And in those 30 tons, they have around 70 grams per ton of flotation concentrate. This is an example from another project and that's consistent. We have 70 grams per ton in the flotation concentrate. So let's do a calculation. Let's say we have 30 tons and there's 70 grams per ton in that. Then we get 2000 grams. Now the gravity concentrate is not calculated in that yet, it's only flotation. So this is around 2000 grams that we have. So that's grams. Let's go to troy ounces. That gives us about 70 troy ounces from these 30 tons. Let's say this 10 tons is also added, then we have 40 tons. So that's about 100 troy ounces. So 100 troy ounces times 1800 is the gold price today. We have around $180,000 of revenue, and we delete some of the concentrate fees on that. Will probably be then 150,000 of revenue. So I think that's not enough. to pay the bills. I think the burn rate is about 500,000 per month. So this will only pay half of the bills. So I'm not sure if there will be another financing here to bridge the 30-day gap. So we already had a financing of 2 million the last time. Maybe that's enough, I'm not sure. So that's one risk, that we need to bridge these 30 days and we do not have enough revenue for that. 150,000 is not quite enough. That's one. Let's see what we can calculate else from this. So let's take a look at the evaluations and what they are actually doing right now on this process flow. So the ball mill is going out of production, going into maintenance because they have to fix something. So this whole process will be stopped, of course, because this is most important. They're also adding some cleaners here to increase the recoveries. So last time the recoveries were around 40% as calculated from the test mining. They have added the Wilfley table, which will increase recoveries, probably 60% then. And then they will install some of these things, some minor issues here on the flotation. Will probably then go to 70, 80%. I'm just guessing. So let's say we go to 80% here in gold recovery, 150 tons per day. They said that they were now at 120 days, 120 tons per day. So I think that they will go to 150 tons per day very soon in the next month. So I'm taking 150 here. We do not know the grade of the high grade ore yet, but let's say that's 10. Gold price of 1790. Then AISC of 1050. Then we get a valuation of $52 million. We are currently at $38 million. So there's still upside. And after this 30-day downtime, we will probably go into steady state production with 10 grams per ton head grade. And that will give us a valuation of $50 million. So there's upside. And after that, we will start increasing production. We are now at 150 tons per day. 100 tons per day will continue to be added. Next year, we go to 300 tons per day. And then you can easily see if that happens, then the valuations will become higher. We will go to 100 million. And hopefully they will be able to follow this plan and increase production to 30,000 ounces per year. So it's progressing well. Some issues, of course. 30-day downtime is not very pleasant, but it doesn't matter in the long run. If they are able to get everything fixed, then we will eventually go to these numbers here. This will probably go to 90 in the future, because you know, when operations are started up, these grades will improve. You can see here, for example, 50 grams per ton in January, and then goes to 70 grams per ton in February. It will improve. This is from another mine with a similar process, and these numbers will improve over time. So we'll probably go to 90% in the coming months, and that will give us at $150 per day, 60 million value. So there's around 50% upside when we go into full commercial production. So this is a small update on this company, Winston Gold. Hope you liked this update, and we will see what happens. We'll see if they can fix the issues, if they give us more actual numbers about the costs, the head grade, the recoveries, because we are now just guessing. And I'll see you in the next video.